All right, guys, welcome back to the M1 Finance Portfolio Review, Dividend Portfolio Review. Welcome back to the channel. If you're new here, please consider subscribing to the channel. I'd love to have you join me in the journey to passive income and creating an additional stream of income. The goal here is to create enough passive income through dividend stocks to cover the cost of living so that basically a 9-to-5 would be completely just a waste of time and I could live entirely off of dividend stocks. And yeah, so consider subscribing to the channel if your goal is similar, to be able to live off of dividend stocks, the income from dividends going forward. So anyway, this is my M1 Finance Dividend Portfolio, and I just happened to notice that I just recently got a small dividend payment from SPHD Invesco S&P 500 High Dividend Low Volatility ETF. Now, this is actually one of the few ETFs that I own in this portfolio. Most of them are dividend paying stocks rather than ETFs. As you can see here, the portfolio is sitting at $33,109. We're up $7,500 and the return is just under 38%. And I've got $1,300 sitting in cash that I will eventually be deploying. I do want to touch on real estate ETFs today, rather than real estate ETFs, but real estate investment trusts. So in my real estate investment dividend slice, I've got Realty Income Corp. I've got Simon Property Group, that's ticker symbol SPG. Realty Income Corp, ticker symbol O. I've got Welltower, ticker symbol WELL. LTC Properties, Store Capital, and New Residential Investment. And this REIT, this blend of REIT stocks inside of this M1 portfolio slice it's been doing pretty well. I cannot complain here. Looks like the best performer in the list here is Simon Property Group, which I actually had the least amount of faith in going into the pandemic. And it sure has turned out to be the best holding in the bunch, sitting at 92% gain. Not too bad at all. And the others, it looks like the worst performer still yielded 23%. So not a bad gain. If only I had more money invested in these, huh? Yeah, so anyway, yeah, more on that later. So with regard to the housing market, houses were once plentiful across the United States. Now half of the cities don't have enough homes. Now, I talked about unintended consequences with the Fed raising interest rates and how the housing market is completely different than we were in. The situation with the housing market is completely different than compared to like 2007, 2008, 2009. And I'm not going to go into the differences between the two housing markets in this video, but you can check out my previous videos where I did go into it. You can hear my thoughts on that. It says here, America's big coastal cities are known for their pricey real estate driven by zoning restrictions and inadequate supply of homes. Now, those problems are increasingly bedeviling once affordable towns and cities across the United States. More than half of the nation's metropolitan regions had an undersupply of homes in 2019, a sharp increase from 1/3 cities in 2012, according to the recent analysis from housing policy group Up for Growth. The nation is short 3.8 million homes to meet its housing needs, double the number up from 2012, according to the Up for Growth Fund. Now, this is a critical piece of information. So, like, whether you're investing in the stock market, you're investing in real estate, if you're investing in single family properties, if you're a first-time home buyer, if you're a renter concerned about rising rent prices, and you're strongly considering purchasing your first home, even if you're a real estate investor, this matters tremendously. The nation is short 3.8 million homes to meet its housing needs. So that means that there is more demand than there is supply. And based on the fact that the Fed has recently raised interest rates three times this year, we're looking to see a fourth interest rate of probably anywhere between 75 basis points to 100 basis points coming out of the Fed. Jerome Powell is going to be speaking about this and confirming in the next week or so. This is making lending more and more expensive, not only for the buyers, but it's making it more and more expensive for builders to finance the build costs of new construction homes. So this is kind of like one of those unintended consequences. One of the goals of the Fed was to slow down spending, slow down the purchase and acquisition of single-family homes, and also to drive down the price of homes as well. Well, from what I'm seeing, I'm not seeing a tremendous decline in prices. In fact, in my local economy, real estate in my area has not shown any declines in prices. Certainly, the purchasing velocity has slowed down, but I'm not seeing any declines in prices. And if anything, the only price decreases I see are overpriced houses to begin with that is likely part of their strategy. Like, there's nothing stopping you from listing a $500,000 house for $600,000, and then the next day you chop the price $100,000 to make it look like you cut the price, when in all actuality the price was just incorrect to begin with. So that really skews the data when you see instances like that. It says here, the lack of housing is spreading beyond large coastal metropolises like San Francisco and New York, and into communities across the United States. As a result, home prices have surged even in smaller cities, while exacerbating inequality, with housing costs shutting out many people of color, young adults, and low-income workers from the dream of home ownership. So the very thing that raising interest rates was allegedly supposed to be doing, it did not do. It's supposed to help bring down the pricing of homes, and it's not doing that according to this report, and certainly not according to what I'm seeing. And a lot of people have been sitting on the sidelines for the housing market, trying to wait for this housing market crash. But this housing market crash may not come, to be honest with you. The thing is what I've observed is whenever everyone expects a crash, the crash usually doesn't happen. And that goes for the stock market, that goes for the housing market, that goes for the cryptocurrency market, just about any market. When everyone's hip to a crash or expecting a crash, a lot of people kind of take additional precautionary measures and they prepare for it. And when there's this collective thought that a crash is going to come, a lot of times the crash is averted because, I think everyone pretty much gets on the proper mindset to avoid that. Anyway, so this could have long-term implications if many Americans are locked out of buying, which is considered one of the primary avenues of wealth building over time. I actually did the math on the previous house that I own. Well, I still own it, but I made it a rental property, so that's another form of passive income for me. That house I used to live in, after appreciation and subtracting how much I spent on the house, to live in the house for the last 10 years or whatever, it was almost a free room and board for 10 years because the appreciation outpaced how much I spent on mortgage payments. So, outside of utility bills, I pretty much got to live there for free. So, yeah, real estate is easily one of the most tremendous ways of building wealth and creating passive income for you and your family. So it goes on to say here, clearly affordability is at a crisis point for millions of Americans across the country. This comes from Mike Kinzingella, CEO for Upgrowth. Where we are seeing underproduction, we're seeing home ownership fall further and further out of reach. So, and this has a lot to do with passive income generated from rental properties. So, whether you're a landlord and you have rental properties, or you're a real estate investor, or maybe you're considering adding real estate investing into your passive income portfolio, as more and more homeowners or as more and more home buyers are priced out of the housing market, just think about how many more renters cannot move on to the next step into home ownership. So that means the rental market demand will increase. theoretically, and rental prices at a minimum will stabilize. If not, realistically, they should climb higher and faster. Yeah, so I'm not seeing the housing market crash here. So basically, the 83 metropolitan regions that shifted from having a sufficient housing supply to a shortfall are scattered across the United States. Many of them are less affluent cities that lack the booming technology, finance, and other major industries found in America's biggest urban hubs. So we can see here the undershooting population growth according to this chart. So yeah, we do have a problem, and the current housing market is particularly tough on low-income Americans, and we're going to continue to see this. And I was certainly one of those low-income Americans, and 15, 20 years ago, I decided, hey, enough is enough. I'm looking at every side hustle I can come up with. I'm going to pick up part-time jobs. I'm going to boost my income. I'm going to pay off all this high-interest credit card debt. I'm getting out of this rat race. I'm getting out of debt. And I just literally stacked my money as quickly as I could, paid off debt as quickly and aggressively as possible. And I invested everything once I started to see the light of day, getting out of debt. And it's one of the smartest things I could have done. And so anyway, I totally encourage anyone who's looking to build passive income and free themselves of the 9-to-5 grind to strongly consider just some sacrifice to hurry up and build some momentum and get your family on the path toward financial freedom. It says here, we have partly been in a development boom over the last 18 months, but the typical rents for those properties are about $1,700 to $1,800 a month. The median renter can only afford about $1,000 a month. So this is scary. If the median renter is only able to afford $1,000 a month and rent's going for about $1,700, $1,800 a month, we could possibly see an uptick in homelessness, or multiple families living in single-family residences just trying to make ends meet. But it certainly doesn't have to be that way. There's many ways of increasing your income through side hustles, boosting your skill set at your job if you're working a regular 9-to-5, online businesses that can be started. So there's ways to increase your income. I'm not going to say they're easy, but there are ways to do it. Many people in the community have done it. I encourage you guys to explore those opportunities. Hit me up in the comments down below if you want me to cover more ways to make money from home, create, maybe side hustles, different online business opportunities if you want to hear more about that from me. But anyway, guys, so I just wanted to give you guys a quick update. I am still here on my M1 Finance portfolio and some of my real estate holdings. I hope that you guys got some value out of this video. Please consider dropping a like for the video. Also subscribe to the channel, and I will see you guys on the next one.